Tonight on Moneyline, worldwide Yahoo, the web phenom, makes another aggressive move into online broadcasting. And with a technology deal that lifted the prices for both stocks, one of the biggest deals ever in cyberspace, in fact, Yahoo today stunned Wall Street with a $5.7 billion takeover offer for Broadcast.com, a company that went public only 8 months ago and lost more than $16 million last year. But as Bruce Francis reports, Yahoo is more interested in broadcast business than its balance sheet.
The broadest reach on the internet is marrying the provider of some of its most advanced content. Yahoo promises to use its mass market appeal to bring Broadcast.com's streaming audio and video services to a more global audience. The deal adds up to a 10% premium on Broadcast.com's stock based on yesterday's close. Each Broadcast.com share will be swapped for about 3/4 of a Yahoo share.
You know, we don't stand still, right? And so basically combining the two companies allows us all total degrees of freedom in terms of leveraging the platform that both companies have, quickly taking market share.
Already a hit with consumers, now these Yahoos mean business. Corporate conference calls will be one of the first areas the two will collaborate on. That will help strengthen Yahoo's appeal to business users and gives Broadcast.com's mix of sports, local TV broadcasts, entertainment, and corporate meetings far wider reach than Broadcast.com could develop on its own.
I think they'll be able to leverage it, the technology, and really be able to monetize that financially as well.
It's the latest in a series of multi-billion-dollar internet mega-mergers, including Yahoo's recent acquisition of community website GeoCities, America Online's purchase of Netscape, At Home's buyout of Excite, and the three-way merger between Lyco's home shopping network and Ticketmaster City Search Online.
I believe that for the rest of this year, we'll probably see additional consolidation. We'll probably move to about a half a dozen players within the sector, and there's going to be a real scramble and race to consolidate and get to as big a scale as possible in order to be competitive longer term.
Yahoo says that it isn't done making acquisitions. It will continue to look at content sites especially closely. But the company says that simultaneously digesting two deals worth nearly $10 billion probably means that the next purchase will be smaller. Lou?
Depending on which direction Yahoo's stock moves, right?
And the other ones that they could be, those multiples are sky high.
Bruce, thank you very much. News of the deal electrified investors in both stocks, apparently. Broadcast.com, its shares up 11 13/16. That stock has surged 50% since reports about the deal first surfaced. Yahoo today gained 11 3/8. Other online broadcasters rallied as well. The real beneficiary, apparently, Real Networks, up 35 11/16 on the day. Not bad even by web standards. Interview gained 15 1/8. Visual Data up $2.75. And Audio Highway up 1 11/16. I'll be talking with the CEOs who put together this latest net deal, Tim Koogle of Yahoo and Broadcast.com's Mark Cuban, in just a matter of moments. In tonight's Moneyline Focus, the making of an internet juggernaut. With the takeover of Broadcast.com, Yahoo is transforming itself into a multimedia powerhouse. Not bad for a company created less than 5 years ago by two Stanford graduate students. The Moneyline Briefing book shows this upstart has a larger market capitalization than Boeing, more than $32 billion. The stock has a fair multiple as well. It's trading at 1,500 times earnings, but unlike most internet companies, it is making money. Yahoo made $25 million last year. And joining me now from Yahoo's headquarters in Santa Clara, California, the chairman of Yahoo and Broadcast.com, Tim Koogle and Mark Cuban. Gentlemen, congratulations.
Thank you. Thank you very much.
Tim, let me ask you, Broadcast.com, what's its importance to you?
Well, a number of things are really important. First off, as you probably know, we certainly do, looking into Broadcast.com, it is an absolute leader in having aggregated and built the ability to serve multimedia content. They have a very large content library right now. If you look at our large global audience, which is 50 million and growing as of December, across a whole bunch of worldwide properties on the Yahoo network, we know absolutely that users want now and will continue to want in greater amounts richer and richer content delivered to them in context. So, the proposition for us was look over the horizon, make hay now by layering on top rich content on top of our existing network, and position the company strongly for the future as bandwidth continues to open up.
Mark, you took the company only public, 8 months ago. Very competitive. Was it your judgment you had to do something of this nature, either be acquired or take another tack?
Oh, not at all. Our business has been and continues to be very, very, very strong. We just saw this as a unique opportunity to combine forces with the leading brand, the leading organization on the internet, and that's an opportunity you just don't pass up.
Now, let me turn back to you, Tim. The idea that you have now taken on another prime asset within the web, what do you do now?
Continue to grow worldwide. Execute. Run like hell.
And you are so large in terms of both your unique users, and your page views. Is acquisition really the strongest and most realistic option for that growth and running like hell, as you put it?
Well, we've always executed kind of multi-pronged strategy. We've partnered aggressively since we built this company, as you probably know. We continue to do that. We also drive organically with a lot of the things we develop in-house. And we supplement that with acquisitions occasionally where it makes sense. Pick up a leader that gets you time to market and drive it very aggressively can be of benefit as well. So, it's never one or the other. A combination is the real magic, and we're aggressive on all three fronts.
And you keep saying, Tim, as I probably know, take heart. I know. The fact of the matter is, Mark, that there are other opportunities out there in terms of video and audio streaming. What is your next big play within that? You're focusing on business and the consumer. Where do you go with the product?
Well, there's so many opportunities, as you mentioned. If you look at our business services environment, every single company in the world can benefit from real-time communications, and Broadcast.com, now particularly in efforts with Yahoo, has a very unique offering that enables corporations to reach their shareholders, to reach their customers, to reach their employees, to reach their benefits with a real-time message. And that's an area of our business we look to accelerate considerably.
And Tim, if I may wrap up with you, all of your primary competitors, you refer to yourself as a network. You're often called a portal. I refer to you as a media company. You have not, unlike your other competitors, aligned with a traditional media company. Is that something that you've considered in your strategy?
Well, actually, we've since we began, actually had very strong business relationships with a broad range of media partners, both in print as well as in broadcast. You may not know, but we have hundreds, actually, of contractual relationships with media partners worldwide. From a marriage standpoint,
yes.
No. Our intention all along has been to build a very large, independent, global branded network business here at Yahoo, and that's what we've been executing on all along.
Tim, thank you very much. Mark Cuban, thank you. Gentlemen, congratulations on your deal, and keep running like hell there. Shares of Yahoo and Broadcast.com both sharply higher today. Yahoo announcing plans this morning to buy the #1 web broadcaster of audio and video programs. Yahoo, of course, the world's largest internet portal, will buy Broadcast.com. It's a stock deal valued at around $5.7 billion, or the equivalent of $130 per share for Broadcast.com. That's roughly a 10% premium over yesterday's closing price. And you can see there that Broadcast.com is at 127 3/4, and Yahoo itself is up 6 7/16 at 174 13/16. To introduce the key players in the deal. Joining us is Yahoo's chairman and CEO Tim Kugel, that's him on the right, and Broadcast.com's chairman and co-founder Mark Cuban, joining us, both of them from Mountain View, California today. Gentlemen, and Steve Frank is joining me in the interview as well. He's been following this story very closely. Gentlemen, good to see you both. Thanks for joining us.
Thanks for having us.
Good to see you both again. Mr. Kugel, did you really say, very un-CEO-like, that you're stoked by this deal?
I did, actually. And it was streamed out to the world on Broadcast.com services.
Yeah, we sort of got that clue last night when you said you'd be doing the conference call and it would be shown on Broadcast.com. I guess that was our first clue that somebody was coming. Why Broadcast.com and why now?
Well, two questions, two answers. Why Broadcast.com? The following. We've had a business relationship with these guys now for about a year and a half. where we've actually been sort of testing threading rich media in the form of audio and video across our network of properties on Yahoo, and watching the natural kind of uptake that consumers have. We've also watched the organic take-up in broadcast.com. They now have over 1 million users per day coming to their site, consuming a wide range of content. We have users worldwide that will, in an increasing amounts, value richer and richer content delivered to them in context across our network of properties. Broadcast.com is a leader, absolutely, undisputed in sourcing, aggregating, and serving rich media of a broad array. Great match with Yahoo, huge amount of leverage, the ability to take that content, put it across our network, get a huge uptake.
Tim, it's Steve Frank. I mean, now that you've got this broadband content, to what extent do you think you might need access to the actual broadband distribution? I mean, you see a company like AT&T, hooking up with At Home, also hooking up with Excite, getting access to the actual pipes. There's talk that AOL might want to get access to the actual broadband pipes. You've been somewhat agnostic on that front. What is your view of teaming up the content with the actual technological means to distribute it?
Yeah. Well, it's an interesting question. If you think about it for a second, those companies that are offering consumers access to the internet have to pick. They're either going to offer true access to the internet to their users, which most are, or they'll offer their consumers access to proprietary networks. If they give their consumers access to the network, to the internet, Yahoo is available, purely and simply. There are heightened promotional kind of deals and promotional presence and distribution presence that we've done deals on for a long time. I suspect, and as part of our strategy actually, the better job you do at aggregating richer and richer content that a very large audience wants, and you bring a large number of eyeballs, all of those access partners will want to partner with you because it brings a compelling offering to their access and helps them get and keep subscribers. So it's a great partnership. We're climbing up on the food chain. I think it just makes it more compelling for all of those access partners to do promotional and presence deals with us.
But in other words, you do need to strike deals with those types of partners down the line. That's yet to come.
Well, to the extent that they give open access to the internet, which most of them do, Yahoo is available, period. And it's just a question then of if you put on top of that some promotional kind of presence or not, but that's really not necessary.
Mr. Cuban, what happens to you and Todd Wagner, your CEO, your co-founder of Broadcast.com, once this deal closes? Does the Broadcast.com culture and identity go away, or are you going to be standalone, or how's that going to work?
Oh, absolutely not. I mean, our organizations are so complementary that Todd and I both see just incredible upside. If you think TK Stoke, you just saw our office last night. We're incredibly fired up. We just think there's just such upside for the organizations together that when we looked at the combination, we didn't say 1 + 1 = 2, 3, or 4, but 1 + 1 equaled an unlimited potential. So Todd and I are both ready, willing, and able to contribute, and you'll see a lot more of what Broadcast.com does when we combine with Yahoo.
Mark, let me actually follow up with the same kind of question I just asked Tim. You created quite a stir a couple of weeks ago with some comments about real networks and raising the notion of possibly wanting to gain access to the kind of software that they have that allows for the distribution of the content that you have. To what extent are you concerned about the sort of contradictory relationship you have with real networks, your dependence on their kind of software, and are you going to be looking for ways to get around that kind of dependence?
Well, first let me tell you that Broadcast.com and Yahoo, both of us are very much technology agnostic. And we're going to try to partner with the companies that give us the best opportunities to present our content. Real Networks at this point has been a great partner. Yeah, we compete with them a little bit in certain areas, but that's the nature of the beast in this industry. But we also partner quite closely with Microsoft with their Windows Media Player, and we expect to get closer to both companies. We think this creates increased opportunities for all of us to work together.
You know, you pushed up the shares of Real Networks, and they're up another $12 today. Is it possible? Maybe I should be asking Google on this one, but are you guys going to go after Real Networks at some point? Is that another piece of the puzzle that has to be filled in? The silence is stunning, gentlemen.
Well,
anybody?
We're waiting for the camera to rotate more.
Yeah, we are.
That's right. You know about cameras, don't you? What about that, Tim? You think about it, other pieces, and could it be Real Networks?
Well, we never make any comments on acquisition targets, as you know. I'll make it really simple on that front. I will however, amplify something that Mark is saying here, which is, in this space, actually, we are client software agnostic. There's right now, Broadcast.com actually streams on multiple formats and will continue to. We stay independent of that. Then the folks that have client software will duke it out in the software product space. That's fine. We're going to support multiple formats for the long haul and just move on behalf of the consumer. I think that the benefit for both Real and Microsoft and others, frankly, that offer up software and services to enable the streaming is that we bring a large audience. We're a huge distribution and promotion platform for both of those, for all of those folks, actually. So I think for a long term, in the long term, we've got probably a really good relationship with them.
Tim, let me go into talking about M&A in another way. You hinted on the conference call this morning that, you didn't hint, you actually said that there would be more deals to come from Yahoo of varying sizes. You've done deals in sort of the three areas, the three C's that everyone talks about on the web: commerce, content, and community. You've got this alliance with OnSale to do the auction site. I guess that counts as commerce. You've got community in terms of the GeoCities deal. You've got content now in terms of the broadcast deal. Of those three areas, or of any others maybe I'm leaving out, where do you see beefing up through alliance or acquisition next?
Well, it's always hard to prioritize those at any one point in time. They take one which is up in front ahead of the other, but we also have layered in a lot of communication, the 4 C's, if you will. Originally through our acquisition of 411, then we did a number of different steps there. I think content aggregation right now, specialty content, bringing that and getting deeper and deeper on behalf of the user is clearly a priority right now. I think the rest of our offering is reasonably complete. Although as we grow the business, of course, we're going to continue to look for opportunities in all 4 of those arenas still.
Let me throw a little cold water, if you will, on this by bringing up that valuations question. The rumor had been out that you guys were talking that maybe push the shares higher, and above and beyond that, you've got this whole internet premium that's been placed on your stocks and many others. Certainly, you're using it to your advantage to cut these deals and others with the high valuations on your stocks. But do you ever, in that one quiet moment you have at night, worry about what the stock market has done to the stocks in the internet and what it could do to your businesses? No question, they grow, they continue to grow. There's a watershed period in right now, but do you worry about what Wall Street has done to your stocks going forward? I'll ask both of you on that one. Maybe you start with Mark Cuban.
Wall Street is Wall Street. There's a lot of smart people doing smart things, but at the end of the day, what really matters is how we operate our company. And we'll continue to focus on getting the best we can out of our organization. And together with TK's company, we think we could take it to new heights.
Quick on that one, Tim Kugel, if you can. I know you and I have talked about this before.
We have, and I'm always really consistent on this because it's how we live our lives. We wake up in the morning and go to sleep in the morning sometimes. Sometimes at night we go to sleep, but sometimes we have a lot longer days than that, thinking about our users and our customers worldwide. Run your business well, be a market leader, manage it carefully, and have it based on a fundamentally strong business model, and in the long, which fits us and it fits these guys. And in the long term, the stock market takes care of itself.
Gentlemen, we must go, but continued success. Good luck with the deal, and thanks for joining us today.
Thank you.
Thank you very much. Mark Cuban with the Do You Yahoo shirt there, the chairman of Broadcast.com, and then Tim Kugel of Yahoo, both of them in Mountain View, California today.
CNN FM, the financial network.
A lot of deals to tell you about, and one of them is a big one in cyberspace. Yahoo buying Broadcast.com. We're going to have detail and talk to the chief executives of those companies in just a moment. Tim Kugel and Mark Cuban. So stay right there. There's a major internet deal today. Official. Yahoo buying Broadcast.com for $5.7 billion, all in stock. Works out to about $130 a share. Broadcast.com is one of the internet's leading destinations for audio and video program, and Yahoo is counting on it to broaden Yahoo's audience and solidify its status as one of the web's top portals. Here's what Wall Street thinks of the deal. Yahoo is up $6.50. Broadcast.com is up nearly $10, so obviously the street hates the deal, wish it wasn't made, and wish these two guys would just go home. Sure. FN's technology correspondent Bruce France has been following this story, and he's got the two chairmen standing by to talk to them.
Tony, you're right. Wall Street is all over this deal. A lot of analysts this morning very positive on it, too. We're going to go now live to Mountain View, California, where Tim Kugel, Chairman and CEO of Yahoo, and Mark Cuban, Chairman and President of Broadcast.com, are standing by. Gentlemen, thank you for joining us, and congratulations.
Thank you.
Tim, let me start with you. I'm going to actually start off with almost the exact same question I asked you when you bought GeoCities. You already had a minority stake in Broadcast.com. You were already working with them on some level. Why did you have to buy the company when essentially you were already getting free slices?
It just makes a ton of sense. I mean, time to market actually is what this is all about, and leadership, and just being proactive, if you will, of getting the two companies together so that, in fact, we've got no limitations on what we can do to carry rich media across all of our network of properties worldwide, and fundamentally create through the combination a company that has an offering that nobody else has, and make hay with it now. So, you know, we're big advocates. You know, we don't stand still, right? And so basically combining the two companies allows us all total degrees of freedom in terms of leveraging the platform that both companies have, quickly taking market share.
You said on the conference call this morning that you expect to start seeing this accrue to earnings in the third quarter of next year. Can you sketch the financial picture out a little bit more for us?
Yeah, I'll try to. The deal actually won't close until probably the third quarter of this year. You know, we have to go through normal filing kind of lead times on a deal like this. So it'll close in the third quarter. We've tried to give not super granular guidance. You know, we rely on the street for building their models and doing the guidance. But the guidance we did give this morning was that it probably gets neutral to earnings 2 quarters into after the close, and then starts to add or accrete, if you will, to earnings in the third quarter of next year, which is fundamentally, sort of 6 to 12 months after close of deal. We get on that kind of a time frame. Prior to that, it is slightly dilutive to earnings, and that should be fine.
Are you set now? Do you need to make other acquisitions? The tone on the conference call this morning was that big deals, assuming ones like Broadcast.com and GeoCities, that's pretty much what you can handle right now.
Yeah, I tried to be a little bit conservative in my tone this morning. I think the way we view it is this. Making acquisitions doesn't make sense unless you do them well. And doing them well includes integrating the companies and the services, and that requires some good time and some good efforts. The good thing about this particular one, in Broadcast.com's case, is that this is a well-run company in Texas that is definitely a center of excellence, and will be run as a standalone broadcast services division, if you will, of Yahoo. So we can begin spending our cycles on building the next new set of products and services, and probably minimal cycles spent on integrating the two companies. That's kind of cool. So that allows us, sort of more management cycles, if you will. All that said, we're pretty prudent about making acquisitions. We try to make good ones, and we try to do them at the rate at which our company can absorb them and do them well. And we'll continue along that same path. So,
Mark Cuban, while we take a look at your company's stock price, we can see that it is just about a 10% premium to what you're trading yesterday. The deal now a 40% premium of your trailing 30-day average. Why is that the right price and the right strategy for you right now?
Well, let's talk more about the strategy. Our companies are so complementary, and our cultures are so in tune that we felt that by combining the companies, that we can accomplish much, much more together than we could apart. We're looking at changing the paradigms in media. We're looking at leveraging Yahoo's ability to globalize what Broadcast.com offers, looking at the ability to take our turbocharging, if you will, our digital media infrastructure, and taking that horizontally across all of Yahoo's categories. And when you look at the financial benefit there, we think the best is yet to come for our shareholders.
Did you entertain other offers? Was Broadcast.com shopped around, if you will, and are you open to others if there's a better offer here?
Well, first, we were not shopped around. Broadcast.com is in a great position. Our business is really, really solid and doing great right now. But, of course, we talked to other folks. I mean, it was our fiduciary responsibility for our shareholders to explore other alternatives, but that's all behind us now. We have no interest in talking to anybody else. We're focused on working together with Yahoo. We think this combination creates the #1 powerhouse on the Internet.
A lot of your business, Mark, depends on strong alliances with your content partners. Have you talked to them, and are you sure that those alliances will stick now that you are part of a different company and one that indeed might compete with some of those partners?
Well, as you know personally, I mean, all content providers want to reach as large an audience as possible. And when you look at Broadcast.com and combine it with Yahoo, all of our content providers and partners that we've talked to are just thrilled to death about the possibility of dramatically expanding their audience through this combination.
What about alliances with cable operators or Bell operating companies as we go down the line, in the same way that AOL has done to secure a high bandwidth future for the company? Is that in Broadcast.com's future with AOL? With Yahoo?
I think I'd rather let Tim address that. He's more in tune with what Yahoo's plans are there.
All right. Well, I'm sorry, gentlemen. We're about out of time, but there's going to be lots more alliances to report on, so we'll have to check back with you then. Thank you very much. Mark Cuban, Chairman and President of Broadcast.com, Tim Kugel, Chairman and CEO of Yahoo in Mountain View, California. And a deal that has taken headlines today, Tony.
And taken Wall Street by storm. The stocks of both companies up very sharp.
Don't always see that either.
Right. All right, Bruce Francis, thank you.
Behind the boardroom segment. 2 internet companies are satisfying their urge to merge. The rumors we told you about last night turned out to be true. Yahoo is buying Broadcast.com in a $5.7 billion stock swap. Yahoo, of course, is one of the most popular gateways on the web, serving more than 50 million different visitors each month. Broadcast.com puts everything from presidential speeches to fashion shows online, but it has never turned a profit. Earlier today, I caught up with the chairman of both companies and asked Yahoo's Tim Kugel why he did this deal.
A bunch of reasons, actually. The primary ones are Broadcast.com is a leader, undisputed in its space, aggregating, basically carrying, serving rich media content, audio and video. And we have a platform in Yahoo's network of properties worldwide that has huge audience. And we know that audience already values rich media content and will continue to value it just in increasing amounts as bandwidth opens up. Being able to overlay Broadcast.com's large and rapidly growing content library in rich media on our distribution platform, very compelling. And we're big advocates of being first movers and moving faster than the competition, and so we seize the opportunity to be proactive in this space.
Well, Mark Cuban, Broadcast.com just went public in July. What do you get out of the deal?
Well, I mean, the mission of Broadcast.com has always been to win in the streaming media space. And when you combine the assets of Yahoo, their global network, incredible audience size, personalization, such an incredible skill set with the skills of Broadcast.com, we think that's just a unique combination that makes us the #1 player on the Internet. And when it's all said and done, the goal is to win.
Tim, there's a lot of talk, this has been rumored for quite some while, and in fact the price of $5.7 billion is a little bit steep. Why the premium for Broadcast.com?
Well, actually, I mean, it's a leader. I made this really clear on my conference call this morning that when we make acquisitions, we try to acquire the leader. And you combine 2 leaders, it's pretty powerful. In this case, they are. The market, it's a competitive market, if you will, for companies, especially leading companies out there. So a premium is always kind of in the cards with that makeup. The premium is actually reasonably modest, actually. Based on yesterday's closing price, it was about a 10% premium, and based on a trailing 30-day average, which covers a fair amount of territory, it's about a 40% premium. So I think it's definitely a well done deal.
Tim, a lot of people had said that Yahoo was being very deliberate in making acquisitions. Why are you doing it now? The timing, particularly on the heels of the GeoCities acquisition.
Great opportunity. We've worked together for a long time, as you know, gotten to know each other, and have built a platform that is ripe, if you will, for more extensive delivery of rich media content. There's no real science in the answer to you, to tell you the truth, objectively speaking. It's been on our radar screen for a while. The only question was, what was the right time? Yahoo has great scale worldwide, and Broadcast.com had gotten to a point where they also recognized that, in fact, they could turbocharge the business combined with us if we move now. So,
Mark, this is almost the good housekeeping seal of approval for audio and video streaming. Tell me, what's the future now of this?
Well, I think the best thing about the internet is that the technology just keeps on going and getting better and better and better. We like to say this is the worst the technology is ever going to be. So as we expand more into a broadband world where there's higher bit rates into the home, as the technology and the compression get better, we're not going to try to recreate television, but we'll create new opportunities. We'll create new entertainment environments. We'll create new information environments. So if you take our strength in delivering digital media and Yahoo's creativity and ability to create new experiences for the users, who knows exactly how it's all going to play out, but I think it's really going to be good.
You have all these incredible venues here, but broadband access, very few home users have it. How do you expect to really capitalize on that?
Well, you're correct when you refer just to the home user, but what I think people fail to take into account that about 50% of Broadcast.com's traffic is in the office during the day, and the majority of office users are on T1 networks. So half of our traffic is actually broadband enabled. So we've been able to deliver high bit rate solutions for our corporate accounts for quite some time now, and we'll continue to leverage that.
Broadcast.com is, I guess, best known for the Victoria's Secret streaming, but there were some complaints about the quality. Has that been taken care of?
Well, it's all relative. We like to say we gave people access to something they never could have gotten otherwise. We're not here to tell you that the internet or internet video is television. It's not. It's a different experience. But we do think it's a better experience. Those people who possibly had trouble receiving the video for whatever reason, well, we made it available to them in an archive format. And had they been at home at night and they gone into the office the next day, they also could have watched it in a broadband format. So we were able to take advantage of the new technologies, the broadband opportunities that you otherwise couldn't have done prior to Victoria's Secret.
Tim, you're certainly a visionary in this internet industry. Can you give me your thoughts on the industry consolidation? You seem to now have several tiers, and of course you're being the industry leader. Do you think you can coexist with niche operations?
Can we coexist with niche operations?
Or will we see more consolidation?
Well, I think both. Actually, is the simple answer. On the first one, the market is measured in number of eyeballs and growth of eyeballs, real audience on the web now and projected size, as well as dollars, advertising, merchant dollars, e-commerce coming on the web. Both of those are more than big enough to support several global branded network players. We fully intend to be one of those. The leading ones. There also is a ton of market out there for vertical or niche players, if you will, with decent business if they manage well. We're not a niche player, as you know, but there's more than enough market to support both broad, overall kind of branded network that are comprehensive as well as niche players. So yeah, I do. And the question of consolidation, I think it's natural. This is a huge market that has emerged over the past several years, and normal to that, if you look back over history, when markets emerge, a lot of new enterprises get formed. Some of those naturally grow into great, large, standalone companies. Others get consolidated, and you go through kind of cycles of that, and I think we're in a natural cycle of it. And at the same rate, at the same time, lots and lots of new enterprises are being formed today on the internet because the opportunity is huge.
Victoria Ricagno. This is the late edition of the ZDTV News. Yahoo's CEO called it the worst-kept secret in the industry. His company's acquisition of Broadcast.com had been rumored for a week. The $5.7 billion deal will push Yahoo ahead of America Online as the Internet's largest network with 63% of all web traffic. Mark Edo is here with the details. Mark?
Victoria, 5 years ago, Yahoo was confined to a graduate student's workstation. Now you could call it the new king of the World Wide Web. The #1 portal is using its leverage to keep up with its customers' hunger for content that moves and makes noise.
Broadcast.com's sexy appeal may be exactly what Yahoo needs to reach the next level. Last year's Victoria's Secret show attracted more than 2 million visitors.
We're acquiring a company that's an absolute leader in the space of acquiring, aggregating, and serving rich media, both in audio and video form, that has a huge library already of content that's growing quite rapidly. And we're going to be combining those two companies so that, in fact, we make use of Yahoo's global network and 50 million plus audience base to leverage like crazy.
Broadcast.com delivers hundreds of thousands of audio and video streams, everything from sports events to films and audiobooks, directly to the desktops. CEO Mark Cuban says it's not as good as TV, but just wait.
The workplace is ready for new things, and I think we'll experiment with it first and experience it first in the workplace, and then slowly but surely it'll find its way into the home.
Yahoo's purchase of Broadcast.com is a clear sign that the portal company is betting high-speed internet services such as DSL and cable modems are just around the corner. Internet analyst Barry Parr sees it as a long-term play.
What Broadcast.com really gives Yahoo is a foot in the door with respect to a future version of the net, which is going to be much faster and in more people's homes.
The deal comes on the heels of Yahoo's purchase of the homepage host GeoCities in January.
GeoCities is another case where they've been able to fill out their product line with a site that is #1 in its category. And the ability to do that, to really provide market-leading services in multiple categories, is really strategically key for Yahoo.
Yahoo says it will make more acquisitions before year's end, but it's cagey about what exactly they will be.
In general, category kind of terms, for sure. You know, commerce, communication, and content are key areas.
But Silicon Valley analysts say look for Yahoo to make a play for online services, like auction houses.
There has been discussion that Yahoo is in discussions with eBay about an acquisition, which would certainly be major news.
Wherever Yahoo goes, its employees seem willing to follow. The mood at Yahoo headquarters was a mix of euphoria and anticipation.
I think it makes the employees a lot more excited because now they can give vent to their imagination. They can create even richer offerings.
And richer pockets. The deal sent shares of both companies up. Yahoo's stock gained about 8% in heavy trading. It closed for the day right under 180. SoftBank, one of ZDTV's major investors, has a significant investment in Yahoo and GeoCities. Broadcast.com's stock spent most of March on the rise. 2 weeks ago it traded in the 80s. Today it closed at 130, up almost 12 points. Both Broadcast.com and Yahoo were among the most active dollar volume leaders. One final note, though, Yahoo expects to close the deal before the end of September. Victoria?
Thanks, Mark. Yahoo agreed to pay $130 a share for Broadcast.com stock. That is a 10% premium over Wednesday's closing price and a 52% premium over the market value just 10 days ago. That's when word first leaked out about the merger talks. Yahoo CEO says the leaks did not cost his company anything extra since the selling price had been negotiated beforehand. The merger has made Broadcast.com's founder the latest internet billionaire. Last week, his 10 million shares were worth $850 million. Now they will turn into 7.7 million Yahoo shares. Yahoo closed today at just under $180. That puts his worth at $1.38 billion. Mark Cuban isn't the only winner in the merger with Yahoo. Even one of the internet portal's major competitors feels the deal has some unexpected benefits. Excite.com's David Z explains.
It's great thing in terms of legitimizing our strategy as we move towards merging with At Home. We obviously have been a primary proponent of the power of broadband and broadband applications for users in the future. And so, I think we congratulate Yahoo for them seeing that as well.
The Broadcast.com deal won't just affect the major internet portal players. For Real Networks, makers of the popular video streaming tool Real Player, the deal brings added exposure.
Given that Broadcast.com, the vast majority of the programming that Broadcast.com delivers is in Real Networks format, this is, of course, a big win for Real Networks.
Shares of internet companies Yahoo and Broadcast.com gained ground today following the official announcement of a stock swap that brings Broadcast.com into the Yahoo fold. Yahoo is the portal or first stop for 50 million internet users, while Broadcast.com is the leader in providing audio and video over the net. Scott Gervey talked with Yahoo Chairman Tim Koogle and Broadcast.com Chairman Mark Cuban.
Mr. Koogle, tell me what Broadcast.com will bring to Yahoo.
Sure, be glad to. This is something we're really excited about. If you look at Broadcast.com as we did in detail, this is a leading company, Broadcast.com, in the space of rich media. They are absolutely a leader in sourcing, aggregating, and serving rich media content, both video and audio. They have one of the largest, if not the absolute largest, library already built up in this. If you take that and overlay it on Yahoo's properties, which is a global network of properties that today, actually as of December, already had 50 million unique users and growing across our properties worldwide. You get a carriage platform in Yahoo's network of properties, a huge audience waiting, just dying for richer and richer content. And on the other hand, you get a leader in aggregating rich media content that you can overlay on that. It's a killer combination.
Mr. Cuban, you and Todd Wagner formed this company not too long ago. You've been doing gangbusters in this little niche. What do you get by joining Yahoo?
Well, when you have an opportunity to join up with the leader on the internet, Yahoo, and combine that with our strengths in streaming media and digital distributions, the synergies were just incredible. And we thought that together we can create just a dominant force on the internet. And, it was in the best interest of our shareholders to go in that direction.
What will you be doing now just logistically? Will you stay in Texas or will you be moving to the West Coast?
No, absolutely. Todd and I will be in Dallas continuing to run Broadcast.com as the Yahoo Broadcast Services Group. And we are excited and ready, willing to go after and make better things happen.
Mr. Koogle, both stocks reacted positively to this news in terms of the acquiring company, particularly when the deal isn't going to be accretive right away. That's kind of unusual. What does that tell you?
Well, I think the street understands the power of this deal, to tell you the truth, and sees the leverage inherent to combining these two companies. So I think it's great. It's a great vote of confidence on the street.
Do you see the day, though, where some of the valuations for internet companies are going to have to come down to earth a little?
That's always hard to comment on. I think some probably will and some probably won't. The ones that are in the won't category probably are the ones that are managing their business well, have the good fortune and the hard work to establish a leadership position and are based fundamentally on a great leverageable business model. We try to run our business that way, I can tell you the truth, and we're doing this for the long term. So, I think in the long term, if you do those sorts of things, the market values you properly, and this is a huge opportunity. So,
Mr. Cuban, you've built a wonderful retail organization. Is that also one of the things that Yahoo wanted?
When you say retail organization?
The sales force.
Oh, our sales force. Well, we're very proud of our sales force. We've got, at the end of last quarter, 85 salespeople. But what's really exciting about our sales force is that we're focused on selling streaming media and business services, which is a great complement to Yahoo's incredible sales force. So when you put two market-leading sales forces together, I think the synergies will create great opportunities for both organizations.
Very good. Thank you both for joining us today. Mark Cuban of Broadcast.com, Tim Koogle of Yahoo.
lost 7/8 to close.